Good morning, everybody. Happy Thursday. It's May 8th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Bringing this to you every Monday and Thursday morning, roughly around 8:30, 8:45. Give you an idea of what markets are doing, what they've done, where they may be going down the road. So let's talk about markets this week. So huge down day on Monday and Tuesday, follow through. Yet yesterday, we came back a little bit. Had a modest up day. We were moving around quite a bit. Volatility in the markets, as you can see on the futures chart. Look back over here on the left-hand side of the chart, and you can see what kind of volatility we had on Wednesday. Right over here. This was after the during the Fed meeting, and then after the Fed meeting was over, we had a lot of big movement up and down. I'm going to talk about that in just a couple of minutes. Then overnight, we had some news that apparently the United States and United Kingdom come to an agreement. Maybe it'll be announced today with the trade agreement. Maybe that's one of many that are going to be coming down the pike. We don't know. As we have been worried about with these trade deals being announced or being renounced or whatever, it's been causing a lot of angst in the markets right now, a lot of volatility in the markets as well. So I said I was going to talk about volatility here a little while ago. Implied volatility is still sitting rather low, relatively speaking, 22%. We did rise up to about 24% yesterday, but now it looks like we're backing down to just under 23% on the VIX. Realized volatility, totally different story. Now, what is the difference here? Let me just give you a quick tutorial here between implied volatility and realized volatility. So implied volatility is the amount of volatility and movement that the market is expecting to happen into the future, right? So when we talk about the VIX, we talk about 30 days worth of volatility. Where the VIX is currently right now is the expectation of where movement of the market is going to be over the next 30 days. Now, realized volatility is where we're currently at right now, what we're experiencing currently. They don't necessarily have to be in alignment. They're usually very, very close. But as you can understand, over the past several weeks, especially just look at yesterday, we realized that implied volatility, it really tanked yesterday. It was down about 5%. Yet we had this huge moves in the S&P 500, the Dow Industrials, the Russell 2000, and the Nasdaq and other indices. We had big moves up and down all during the day. So how do you explain that? We explain that by saying that realized volatility is trading at is sitting at a much higher level than implied volatility. Just a couple of weeks ago, my good friend Larry McMillan wrote in his report that realized volatility was up near 50%. When implied volatility was only at about 28%. So that is really a huge divergence between implied and realized volatility. Eventually gets settled, right? But I think the realized volatility is a function of the fact that we really don't know. We know tariffs are a large part of the worry in the markets and the economy, but we just don't know the extent of what they're going to be. And plus the fact that any day we could get some announcement that's positive or negative. So realized volatility is going to be raised because of all that uncertainty out there. So once some of that uncertainty is removed, and we get some more certainty in the markets and with the economy and with these tariffs, I think that realized volatility is going to come sharply down. That's not necessarily going to mean that the markets are going to go up. Now, we usually see that there's a strong correlation between implied volatility going down and S&P 500 or the markets going up, right? But we don't see that necessarily, that correlation between realized volatility and markets. So just be aware of that. If realized volatility comes down, it just may signal the fact that markets are starting to calm down and accept the fact that things are going to settle down here with terms of news, and we're not going to get any of these Scud missiles dropping on us from the White House or from the administration or from anywhere else. So what do we got going on so far this morning? We have the S&P 500 up about 35 handles here. We're off the highs of the morning. Dow Industrials up about 189 or 180. Nasdaq up 192. We had some earnings last night. Strong earnings from Mercado Libre. MELI were pretty good. I think the stock's up about 10%. Let's take a look at that one right now. MELI, that stock is up about 8%, 192 bucks. We had good earnings, but a poor response from the markets on ARM Holdings, ARM. Stock is down about 8% right now. This morning we had Peloton that came out with earnings. Looks like they were good, but I think they guided their quarter a little bit lower, so they're down about 7% over here. Last night we did have earnings from Carvana. That stock is really ripping today. It's up about 14 bucks, about 5.5%. And we also had strong earnings from AppLovin, which is up about 14%. It's about $346 right now, after dipping right after the earnings came out. So what are we going to have? Oh, I think Shopify also came out with a miss. Yes, that stock is down about $7, down about 8% right now. So what I've been noticing here, it's been hit and miss with earnings, right? So I've kind of slowed down my role a bit on playing earnings. I think it's difficult right now. I think you have a challenging environment right here, and especially since the liquidity has been rather poor for the past couple of weeks into the markets. And I think that the environment that we're in, certainly the time frame that we're in. Don't forget, we just started May, and what does May signal? May signals between May and November the worst 6 months of trading in the markets, right? Everybody seems to forget about that. Remember that whole phrase, sell in May and go away? I don't think we necessarily have to sell in May. I think the last 3 years, it was sell in May and you're going to pay, which means that you're going to pay up for higher prices later on in the year. So I think that we just have to take it slowly, be cautious each and every single day, and just play the markets that are in front of us. I think further to expand upon that discussion that we just had about realized and implied volatility, I think that the prevalence of some of these zero-day trading to expiration options, or the zero DTE, has also magnified the realized volatility as well too. Because if you're in an option that expires one day, you have really hardly any, if no, decay. It's all based on real values of the index, whether you're trading or the stock that you're trading. So that's also contributing to some of the increase in realized volatility, because a lot of people are playing those zero DTE options. See, as far as the S&P 500 is concerned, you can certainly make an argument for a cup and handle pattern over here, catching support at the 50-day moving average. If we can get above that 200-day moving average, which comes in at about 57.47, that would be certainly a positive here. But I think we're kind of trapped in a range right now. We do have a gap to fill from last week, which is at about 55, let's call it 55.70. Roughly, that was that big, huge reversal day where we came down really sharply after the open and rallied back for a nice positive close and closed at the highs of the day. So we have another gap down there at about 52.67, and that's also going to need to get filled eventually. And if it does get filled, we can have a higher high and a higher low in place. And so that's I think it's going to be it, everyone. I wish you guys all a great trading day. Again, remember, keep a lot of cash, keep a lot of puts on, and just cautiously tread water here. Because look what happened to Google yesterday. Google got absolutely just massacred yesterday on really heavy volume, and some bad news happens. Right, these things are going to happen. These news events are going to happen, and you got to be careful and be cautious of what you got going. So, wish you guys all a great trading day. I'll be back on Monday. Next week I will be in California. I'm leaving on Tuesday night, and you'll hear from me Monday. I'll be here. Thursday morning, if I can get myself up at 4:30 in the morning from California, we'll do this again. All right, enjoy yourself. Have a great day. Have a great weekend. Thanks again for spending a little bit of time with me, and I'll see you guys all next week. Bye.